So welcome everyone to this, as was mentioned, the second last session. I'm going to kick us off with a quote that was immortalised by Liza Minnelli in the Broadway musical Cabaret, which is, "Money makes the world go around."
Yeah, but it's only going to work if it's an economic model.
Okay, and that's not me talking either, so... and I would like to use that quote from one of the songs, for those of you who have seen Cabaret, as the basis for my hypothesis, and I'm going to start with the statement that I'd like you all to take away from this session before my panel have the opportunity to disagree with me. And that is, the best way to get business to act on climate change is to price carbon, and that's basically going to be the hypothesis for our discussion today. I think the good news on that hypothesis is that most of the governments in our region are starting to agree with me. We see China has now 7 pilot schemes in place that is directly pricing carbon and have announced that they're looking to move towards a national emissions trading scheme in the next few years. Korea launched their scheme on the 1st of January 2015. New Zealand, as always, leads the world and has had the scheme for about 5 years. And we all hope that Australia will see the light and reintroduce a price on carbon sometime in the future. Unfortunately, I think hell might freeze over before that actually happens, but we hold our breath. But what these schemes suggest is that a price on carbon is inevitable. The questions to me are not if, but when and how much. And that's what I'd like to explore in our panel sessions today. So before I ask my first question, I'm going to go and sit down in a sec, but before I do that, I will introduce our panel. We have Roelof, who I won't need to introduce again because we've just heard from him. But we also have Renat Heuberger, from the CEO of South Pole Carbon. We have Dave Carlson, who's the head of energy and gas at the Singapore Stock Exchange. And we have Vinod, Kesava, who's the co-founder of the Climate Resources Exchange. And they're going to be asking some questions of them right now, and we'll hopefully hear from them. I look forward to this discussion, so thanks. I will take also the opportunity to just remind you that we are going to be taking your questions from the audience through the app. So if you do have any questions, make sure you put them through the app, and we'll try and answer those as we go. Now, I did say that I wasn't going to ask a question of Roelof, but I'm actually going to start with you, Roelof. So this is your time to shine. I'm interested, Roelof, you mentioned the carbon price in your discussion about having a price on carbon of €50. Interested in your thoughts in terms of pricing that carbon. Is it just on new projects, or do you start to extend that as a corporate entity into things like potential acquisitions, potential innovation in terms of new products, new services? When you're looking at putting your investments or your capital dollars, are you actually embedding that €50 into those decisions?
Yeah. So at the time, we just started with this. We just announced it. So it will be for new investments. But already before the €50 per ton, we looked at the carbon footprint. So anything that we do in innovation is mandatory to have to lead to a lower carbon footprint for our customers than the current solution. So the $50 will be for new projects. So that's where we start with.
Right. Yeah. Right. And look, I think that's something that's relevant internally for an organisation to put effectively a shadow price on carbon. But if I put this question to you, Vinod, how bankable is that? If we look at it from the perspective of potential investors or financiers or banks or equity or debt or equity providers, are they looking forward and saying, we're going to accept a €50 or a $50 or whatever the dollar value might be, with a view that carbon pricing is going to emerge over the journey?
Well, first of all, based on that, euros is definitely a lot better than what we're seeing today.
Right.
With 50 cents to $3 or whatever it is. And that's not very good at all, because at the point it's going at the minute, it will never be bankable in that sense. I mean, carbon credits were meant to be cream to the cake. The project's got to be good in the first place before you actually look at it. But then when you add on the carbon element, it's got to be something that's so important. That wasn't that important before, but it's really important now. And therefore, if you have at least a price of 50 euros per ton, I think it'll become extremely bankable. So that's the way we see it. But I think another important point is that we've got to see where that 50 euros, for example, as a base price is going. You know, it's not just about the price of the environment, but how you include society within it. Does it create jobs? You know, is it going to improve healthcare? All those elements, all the social elements have got to come together with the environmental element. And then we're looking at resilience and self-reliance, not just dropping words about sustainability all the time.
Yeah. So if we're talking about a carbon price at the moment of 30 cents, would you say, therefore, that low-emission technologies that will take us into the future are currently undervalued?
Pretty much, I think.
Yeah?
Yeah, it's way too low at the minute, because even if you look at the price of renewable energy on its own, and you use a metric of, for example, per watt of fossil fuels, you need $1 or slightly less than $1. And in the past, for solar, it used to be, well, it still is, $1.50 to $2 per watt. How are you going to cover that incremental additional cost to just the technology itself? It's got to be from something, and that's carbon, because why then, otherwise, would you do it in the first place?
Yeah, good point.
Yeah.
And look, if we actually value carbon more to Vinod what you're expecting it should be rather than what it is today, what sort of impact is that likely to have on, say, other markets? If I put this question to you, Dave, you know, what impact would that have on an energy price or electricity or gas market? And, you know, and do you see the trading of those markets at the moment pricing these things into them?
I think the first thing to reflect on is that if you're coming into the energy markets, investing, building, it's a long-term investment. So you're going to have a view over what is the impact of government policy, intergovernment cooperation, when is the carbon price going to come into the market, what's the likelihood of a carbon price coming into the market. And I think the key thing is the certainty. It's easy for investors to make decisions based on certainty. It's much harder to price in a political debate that's still taking place. So if I'm if I'm investing in a clean technology, do I take the punt that there will be an incentive? If I'm investing in a thermal-based generation, do I take the expectation that there will be a carbon price that I have to factor into my decision? And with that uncertainty, it makes it very hard for investors. Taking another look at it, if I want to, say, manage my risk in a market, I want to be pricing forward. So I need to understand what's the underlying cost of the commodity going forward. If I'm trading that, I'll also be reluctant to go out past where my comfort level with government policy decisions are. So if I expect a emissions scheme to come in the next 2 to 3 years, I won't be putting a price out past 2 or 3 years, because I won't be able to price that certainty or uncertainty in. So I think the biggest impact is its uncertainty. So
can I, given that you work for an exchange, can I challenge you on that, Dave, a little bit in the context of, you know, this comment about certainty? Let's be honest, I'm not sure that there's much certainty in the price of coal going forward or the price of any sort of commodity at the moment, and given the volatilities that we see in the market. There's certainly no certainty in equities at the moment. Do you think it's fair that we should be saying that there should be certainty in carbon pricing as well?
Traders and investors are used to taking risks. But if you talk to them, probably the hardest risk to manage is political or regulatory risk. There's no way you can really hedge for that. You can do various scenario analysis, but you will price in a cost of uncertainty, and it will make that investment less desirable over more certain investments. And I think that's what's going to happen, is that, remember, investors tend to be global. And if they're faced with certainty in one jurisdiction, they'll make an easier decision. If it's a much uncertain, they may be reluctant to go into that market.
So maybe coming to you, Renat, do you agree with that? Are you comfortable that we can't price that risk that we're talking about here?
Well, ultimately, simply speaking, any investment decision depends on 3 factors. Certainty, like risks, returns, and scaling potential. And it's a combination, right? There's three variables you can twist. And if the combination of these three factors, risks, returns, and scale, makes sense, the investment goes through, and if not, then not. Very simple. And the question is now, what does this leave us with? There's an interesting study by the Climate Policy Institute, Climate Policy Initiative, about measuring how much money is actually going to climate finance. And the answer is, 2014, it was about $330 billion for climate finance. But if you then look, what kind of money is it? You will see that more than half, 170 billion, is actually local project developers with their own equity doing deals. And the balance, more or less, is actually multilaterals, like the World Banks and the likes, who are giving preferential loans. Now, if you ask how much commercial money is in the game, the answer is 19 billion. Right? Nothing. Just to remind ourselves, there is a total of 100 trillion assets under management globally. So we're talking about nothing. So the conclusion is no, at the moment, climate finance is unfortunately not yet a mainstream investment case. The three factors I mentioned before don't seem to add up yet. And the question is now, what are the lowest hanging fruit to change that model? Risk, more guarantees, more forward-looking pricing, returns, and then also alternatives. One topic that hasn't been mentioned, for instance, let's not forget the world, in the whole world, every year, we spend still $400 billion on fossil fuel subsidies. So if you just remove that, you would already twist these three factors a little bit.
It's a good point, and I think you make a comment about sustainable finance, and maybe I might throw this to you, Vinod. The question, are we capturing? Is it about sustainable finance, or is it about mainstreaming renewables as a normal investment opportunity? So we hear lots about the development of renewable energy, for example, globally. I think I saw a study that sort of said 2/3 of the next wave of power generation is going to come from renewables. It's not going to come from fossil fuels. Is it about capturing that sustainable finance, or is it about mainstreaming finance into investments that will actually be improving the future rather than detracting from it?
Well, if you ask me, I think it's about staying alive. And if you want to stay alive, or the future generations to be alive, then renewables has got to become mainstream at some point. It can't be a situation where it's a whole bunch of excuses that, countries are not coming to an agreement on how it should be, how it should work out. Because if we're looking at long-term, as I mentioned earlier, resilience, and it's really about staying alive. If you don't have it as the mainstream at some point, we're already seeing the results today. So it's not just about carbon finance per se or sustainable finance in that way anymore. It's got to become the main thing to do. Again, it's survival.
Yeah, well, what about you, Dave? Can you see that happening?
I think it's already, a fact, it's already happening. So if you look at 2014, according to the International Energy Agency, more than 50% of new generation was renewable. And the investment in that was $270 billion. And of that $270 billion, 80 billion of it was in China. So China's punching above it's meeting its obligations on the world stage. Coming back to the point that was made about subsidies of fossil fuels, the figure for last year, $550 billion. If you look at what has gone into incentivising renewables, $120 billion. So I'll say that again, $550 billion for subsidising thermal, $120 billion incentivising renewables. Currently, according to the World Bank, there are about 40 countries that have some form of emissions trading in place, or carbon pricing in place. The value of those schemes, $50 billion.
Roelof, you mentioned the role of business in tackling this challenge. Having said that, from some of those statistics that we've just heard, it sounds like governments really aren't coming on board. But what's your context in relation to those two competing issues?
I think it has to work together. Let me give one example. 50% of the sales of materials in our company goes to the automotive industry. We have been trying to convince the automotive industry for 20 years to use plastics instead of metals, okay? To make cars lighter and therefore more fuel efficient. Truth be told, car companies only started to take this serious when the European Commission imposed penalties on CO2 emissions above a threshold of 130 grams per kilometer per car. Penalties that could run into the billions per company. So that generated a lot of innovation, which is good for business, but it was this combination of business and government. The problem that you have with carbon pricing, I mean, DSM has announced this, and 50, I think, is only the start, as I explained in my speech. But you are also in a competitive world. So if other companies don't follow, you are at a competitive disadvantage. So I believe that governments have to play a very important role in legislation to support driving the decisions in the right directions. So you have this triangle of government, business, and education. So government, in my view, very important.
I mean, you raise a good point there, and then I'll throw to you, Renat. You raise a good point in the context of, a view that you need to set the boundaries for enabling investment. I might throw in the context of, we talk about China and the investment that China's made in renewables. You talked about 50% of the renewables being in China. We've talked about China's targets and how they've perhaps been a little bit slow to set targets at the national level. And sometimes I wonder whether that's some conspiracy on the Chinese government to basically get their own house in order, and once they have built up all this infrastructure and technology, that they'll come out and announce a massive big reduction, and then the US and Australia will be behind. What's your sense of that, Renat? Is this part of a preparation for a new wave of ownership of the technology going forward?
Well, frankly, I mean, that's a fantastic conspiracy theory. I love it. I wish it was true, and with the Chinese, you never know, it might actually be true. Having said that, I'm following climate change negotiations since a long time. That somebody made the comment about my gray hair in the morning, and yeah. Frankly, I don't see governments really leading this, to be very honest with you. I just don't see it happening. And I'm talking here about country governments. But I would like to offer you just 3 short other leaders that I absolutely see, and the governments will probably follow them. One of them is investors. If you have observed the past 12 months, you have seen several investor coalitions, such as the Montreal Pledge and so on, which ask, and I'm not talking about asset owners, and I'm talking about figures of like $3 trillion of the Montreal Pledge, the Decarbonization Coalition of 1 trillion as a goal, of investors asking their investees, their corporates, to disclose their carbon emissions. And of course, that's only the first step. The second step is then to ask them, so what did you do about it? Did you actually shift the focus? Now here we're talking about business, because if so much money asks your CEO to be transparent, you'd better kind of take that topic serious, because you might get disinvested. So that's one, investors. And they are not seeing, that's actually interesting. If you talk, why are you doing it? This is not the climate change. That's not because they're environmentalists. It's a risk game. They can do the maths, and they can see that we mentioned it. We can't go on like that. Something will happen sometime, someday. Maybe the Chinese super theory, maybe something else, but something will happen. So they know that, and it's a risk game. Just very quickly, the other one I find very interesting is green bonds. Everybody's talking about it. It's hard to really, at the moment, say what it is to qualify these green bonds. But one thing it is, first of all, it has scale. Apparently this year we're heading to 100 billion of issued green bonds. And one thing that does, I'm coming back to government, cities which are notoriously difficult, having difficulties to get finance because of their low credit rating, they are actually issuing green bonds to finance infrastructure projects, like busways and stuff like that. And I have much more belief in city governments. They're much more agile than country governments. In Singapore, that's the same, but that's a very big exception. And just shortly now, this is your, to come back to your point, Roelof, corporates have, especially the big ones and the leading ones like you guys, you have, through your purchase power, a lot of impact. And in my view, one of the most amazing things we've seen in the region here in the past few months was a big coalition of the likes of Unilever, Mars, Nestle, and so on, forcing Indonesian palm oil refineries to actually switch to green palm. And because they were able to get such a big coalition together, they actually were able to get big guys like Wilmar into the boat and actually say, okay, we commit to clean palm. So this example shows don't underestimate the power corporates can have if they somehow get their act together and have a joint strategy, because then what you just mentioned, this corporate comparative disadvantage disappears because your peers are in the boat and you turn this into an advantage because now that this is happening, those laggards who haven't joined, they will struggle to find clean palm because it's all yours.
So I am keen to get some questions from the audience, but they've obviously not given me access to the iPad because they don't trust me. So perhaps Martha, we could get the password for the iPad so I can actually take some of your questions. But while we're waiting for that, I will open it up to the audience in terms of questions for the panel. And so I do encourage you to come up to the microphones and ask a question while I'm trying to get the iPad unlocked. But while I'm waiting for people to come up to the microphone, while I'm waiting for the outcomes and people to come up to the microphone, actually no, we've already got a question, so fire away.
Testing. Nick Rowley from Robertsbridge. Look, thank you very much for the clarity of insight. I think, Roelof, you're just wonderful in the way in which you communicate about what it is both you're doing and what needs to happen beyond what it is that you're doing. So thank you for the session before, and I think it was a very rich session here as well. I suppose for mine, Mathew, I liked the way you introduced the session. Absolutely, we need a price on carbon, but a very, very key question is what price, and will that price actually lead to the level of investment and transition that is going to get us close to 2 degrees? So, you know, we've had in Australia, just to talk from a purely parochial perspective, you've had very senior business leaders about 9 years ago all calling for a price on carbon. When it was very clear the actual price that the government had in mind, many of those business leaders clearly stated, well, actually, that wasn't the price we had in mind. They had a lower price in mind. So all I'd say is that the proponents of saying we need a price on carbon, that's also pretty easy. But what sort of price have each of the members of the panel got in mind initially and then possibly through time to drive the sort of economy-wide transition that we need?
Excellent question. I might kick off and then I'll pass to the panel. I think the answer is what we actually don't want, in my opinion, and I'll put that big caveat, it is my opinion, Nick, but what we don't want is actually governments setting the price. I think that's, you know, if we take Australia as a good example, one of the biggest issues that we had in Australia was the government did set the price initially, and things had changed in the economy such that it just was out of whack with the global carbon price. And so we had Europe at €7, and Australia at $22. So I think that's my answer to that question initially, that what we don't want is we don't want government setting the price. What we want is the government setting the policy agenda that enables a market and a price to emerge. And I think that to me is an important point. Now, Economics 101 will tell you the further we curtail supply and demand, curtail the supply-demand comparison, the higher the price will be. And I think that's probably the part the government needs to play. but I'll open it up to the panel for response. Maybe Vinod, do you want to respond initially?
Absolutely. Very good question, obviously. I think at the beginning it was based on market mechanics. I know for a fact, we all know for a fact that World Bank was buying carbon credits for $1 at the time, back in the early days before 2000. In fact, for a while after 2000 as well. We know that based on the marginal abatement costs, you're looking at, in the first commitment period, a penalty of €50 per ton. I think that was 2005 to 2008. And 2008 to 2012 was €100 per ton. But again, I think that's really the baseline of a marginal abatement cost. Now the question is, what's the cost for living, for life again? And that question is a very hard question to understand. I completely agree that setting up the policies by governments and agreeing on it, that's good. But it's really private enterprise at the minute that's going to drive this along. That's my take on it. But having said that, let's also look at a point I actually wanted to bring up earlier, energy efficiency, in relation to the $550 billion that's given for, you mentioned it, Dave, earlier, for fossil fuels. I mean, a lot of materials which relate back to carbon, it's being wasted at the minute. If we can just cut that waste, it'll add on billions of dollars to what could possibly be done to actually improve or make fossil fuel technology more efficient. That's also a big driver. It could be part of mainstream for a bit, at least over the next 10 years. So that's my take on it, but I think Roelof, you may have a point somewhere.
€1,000, isn't it, Roelof? Isn't that the answer?
Well, don't put it in a newspaper as a DSM view, but, and by the way, that's to take CO2 out of
yeah, it's all right.
I think €50 is a start, and I hope it will be the nucleus for a different corporate thinking. I don't think it will move the needle. I think €50 will be too small to move the needle, but it's a strong statement if corporations move that way. On the other hand, if you see how many ppms we still have to go until we go off the cliff, that's not a lot. We don't have a lot of leeway in how much carbon we have left to emit. So I think if we want to move the needle, this is the start, but it has to be substantially more going forward, but that needs to be a collaborative exercise, because at the end of the day, we have shareholders that hold us accountable for value creation. And if we don't have an even playing field, that's an issue too.
So there's a question here that I think, given your comments, Renat, that it relates to, I think you'll be pleased to answer in the first instance, that I might take from the audience. I'll put it up on the screen. I think I can do that, if the technology works for me. But the question is, does carbon pricing distract from the real challenge of reducing emissions? If so, is it just delaying the transition to a low carbon economy? And I think we heard a little bit of this from you. Maybe you want to respond, and then I'll open it up.
I love this question. That would have been my next comment. Right. I actually think that this discussion about carbon pricing and what's the right price is the wrong discussion to be had. Because if you go out to your electorate and say, oh, we're going to introduce a price on carbon, I mean, see Australia, a government has been voted out of business for that. So I think that's the wrong approach.
So just going forward, please do not use Australia as an example of anything in particular.
Well, there's a couple of good I'm super, super cautious of frightening people with a price, because that's really the cost. A price on carbon is the fuel to actually transition ourselves to a world where we do a lot of very attractive business, new business, which is very profitable and creates a lot of jobs, especially also in places where I come from, in Europe, where people suffer and in debt and everything. I don't understand why people still fail to see the massive opportunity that low carbon growth brings to us. Just a small example, solar panels. I mean, arguably, the German ratepayer paid a lot of money in, and you could say it was a high carbon price, to basically get the country flooded with solar panels. But the result was that as a consequence of this big push, the panel prices came down. And they came down to a degree that actually in many parts of the world, you don't need a carbon price at all. These solar panels are on grid parity or even below. It's more attractive economically to do them. And so the carbon price is zero. So we have to stop, in my view, frightening people with, we need a carbon price of $500 or $100, because then people say, oh my God, my pension fund goes away. The opposite is true. If we are making smart decisions in what low carbon strategy and technology makes sense, and we help out a little bit here and there with a few guarantees and a few preferential loads, and maybe a feed-in tariff here and there, we will be able to move this technology down the ladder and up the scale, so that very soon we don't need a carbon price, and we're going to fix the problem by the power of markets.
So Dave, just come back to your point, given you work for an exchange, do you agree with that? Or or is it you see pricing will drive behaviour change in business? I mean, we talked about a feed-in tariff, which is to some extent a little bit of a carbon price, but what's your response to that? Can we speed it up with the price?
I mean, it's, a carbon price will drive behaviour.
Yep.
Whether or not it's the most efficient way of doing so, my personal view is it's not. It's a fairly blunt instrument. Have other mechanisms been tried and failed? To some degree, yes. To some degree, no. I think I believe in markets. I believe if you have markets, you have people competing, and basic economics again. You're competing for scarce resources. If you can use a scarce resource more efficiently than your competitor, you'll thrive, and they'll be incentivised to improve. We've seen the shift in Singapore, for instance, when the electricity market came in here. 2 years prior to the market coming in, Singapore were using predominantly heavy fuel oil to power electricity. That's completely shifted, where fuel oil makes up less than 1% of the market now. So that shift from fuel oil to efficient gas, the emission savings, 40% more efficient going from fuel oil to gas. The next challenge is to move into renewables. Singapore is constrained, so solar seems to be the best, most viable one, and it's early days, but things are starting to move in the right direction there. Coming back to China, I think that's an example where they've tried everything. Feed-in tariffs, voluntary renewable pricing to get customers to take it up, regulatory easement, regulatory direction, renewable quotas, and I think it needs to be recognised that it is starting to work in China. If you look at what was invested in China in renewables last year, combined more than Europe and the US combined. And also I agree with you're starting to drive down the cost of renewables with that level of scale. So solar technology, it's 70% cheaper than it was 10 years ago. But yes, carbon pricing will drive behaviour. In some ways, I think it needs to be. I don't think a uniform scheme is going to work. It has to be specific to each geographical circumstance. What's going to achieve the best result.
So I think we have run out of time, and I think my opening hypothesis that a carbon price is inevitable has been successfully argued on the panel. So I think some of us might think that we're hoping that it is, and others might not agree, and that's what a panel's all about. So I would like to have you all join me in thanking the speakers today for their candour. Thank you.